By the end of this video, you'll understand exactly why trading has felt impossible no matter how much you've learned. And you'll see the one key shift that separates traders who stay stuck and from the ones who get consistent results. And I'm telling you, it has nothing to do with your strategy, and you don't need more indicators, and you definitely don't need more information. It's something much simpler that rarely anyone teaches, and once you learn this, you'll literally never be trading the same again. So stick with me, because this is the one concept I wish someone taught me before I wasted years trying to figure it out the hard way. So let's look at what trading looks like in practice. And no, I'm not talking about what the version of what people talk about online. I'm talking about the raw reality of trading. You're going to open your charts. You're instantly going to feel overwhelmed by how much information you have in front of you before you've made any decisions at all. You're probably watching like 5 different time frames at once. You've got probably 3 different strategies you're thinking in your head that you want to trade, and you have a subjective idea of what a good setup should look like. At this point, honestly, you're not really analyzing at all. You're just trying to reduce as much certainty as quickly as possible. This is when you start switching between time frames. Like maybe you'll go on the 1 hour, jump down to the 15 minute, what's happening on the 5 minute, and then switch back up to the 4 hour when you see the macro, go back down to the 15 minute. You're doing all this bullshit, like switching between time frames. You're not understanding what's happening. It's not because anything has changed, but it's because you're hoping something will start to make sense that you keep doing this. So in this mindset, you actually stop waiting for your setups and you start looking for reasons to act. So when you're looking at the charts and you see even something slightly aligned, your mind will fill this gap naturally, and you'll convince yourself, oh, it's close enough. Like I can enter here, that's fine. Or, the trade should work from here. Maybe I'll just enter, or I'll manage the position if it's wrong. Like I'll be fine. But you don't notice these behaviors in real time. Like psychologically, mentally, you've already crossed this line from waiting for confirmation, meaning like waiting for your rules, to backward rationalizing with yourself, aka FOMOing to trades breaking your rules. And this is where the real trade inconsistency starts. Not because the market changed, but because your interpretation of it did. So naturally, traders try to fix this, but they usually and unfortunately misdiagnose the problem most of the time. They think, if I just had a better strategy, I'd stop hesitating. So for a while, they start adding more indicators, they start adding more rules, more confirmations, and they add this whole new layer of complexity, thinking that, oh, this new strategy is going to make me better because if I've got more rules now, I can be more strict, right? And it's only going to help me pick the best setups out. But this is completely backwards for trading because it's so illogical, right? If you were struggling to follow your 5 simple rules you had at the first place, what do you think adding 5 more rules is going to help you do better now? Like, you're literally just going to break it even more. You're making it harder for yourself. But anyways, doesn't matter. For a while, they think that adding these new rules is going to help them because they're doing something, because their brain is connecting the constant action of doing something with the idea of making progress. So they think that they're actually doing something good for themselves. So then when a real setup does show up on the chart, you guys never apply your rules mechanically. You just start reacting in the moment again. You go back to those same FOMO trades. In that instant, your brain bends the rules instead of sticking to them. Shock. Okay, you've added more rules. You were never disciplined to begin with. So instead of being stricter, you become better at justifying your trades. So, and it goes from being, my system says I have to skip this trade, to what you've justified it to is like, it technically meets enough conditions, let's just take it anyway. That's why nothing changes, and this is why your trade execution is still the same, okay? And you're making it harder for yourself by adding these extra rules. So even if your system did look more advanced, your execution has never improved. Everything still appears like a setup, and everything still feels tradable in your mind. And your definition of good or bad setups changes based on your mood. It's completely subjective what you're doing. So the real issue isn't missing information. You don't need more. It's that you're still treating every perceived opportunity in the market as something actionable. Let me show you what that looks like. This is the chart of what my trading used to look like when I took every single setup I saw. I used the same system, the same rules, and the same market, but I acted on everything that happened. So every time I saw my setup or everything that I perceived as an opportunity in the market, this was the result of that. There was no filtering in my trades. There was no trade ranking hierarchy. I had no selection process at all. I was doing everything. Every single time I was taking action. I was reacting. And you can see that all of this inconsistent execution led to the horrible results on the chart. Like, you can see the results are there in the equity curve. You can see the times where it worked. In the beginning, okay, I think I'm cooking, like clearly something's working here. Then bang, suddenly lost half my fucking account, lost all my profits. Like, what's going on? Then maybe, okay, I can make it all back. Like, maybe a slight recovery, back down to more drawdowns. Like, it never worked, okay? And it just ended up break even or slightly negative or very slightly positive. What this really shows is that the system never got a chance to demonstrate the true edge consistently because I would constantly go into drawdown. The execution was based on the emotions that I had at the time. I was reacting. Now look at what changed when I stopped trading like this. Again, it's the same system, the same market, and the same signals, but I'm no longer reacting impulsively. I filter my trades before I make any trading decisions, and I'm also comfortable doing nothing most of the time. What this means, I'm sitting on my hands. I see perceived opportunities, but I just don't trade because I know that if I don't do this, if I take fewer trades, that my performance is going to be significantly better with enough repetitions over time. It's not just about more profits, but it's also about a smoother equity curve, having fewer drawdowns, and getting greater clarity in the system. Look at the difference between curves. Like, I mean, you tell me, which one would you rather have? Because I know which one I would rather have. Like, I'm no longer interpreting every price movement on the chart as an opportunity to instantly act. Like, I don't do that anymore. I wait for specific conditions before I make any decisions. And that changes everything, okay? Now my results actually reflect my strict trade selections instead of pure randomness on this left chart here. So after the shift, I had to rethink how I approached the market. The question became not what can I trade here, but instead it evolved and became into what level of behavior am I operating at right now. And it might sound a bit abstract, but it's actually pretty straightforward. Either you're reacting to everything that the market offers and everything that you perceive as an opportunity, or you simply engage selectively. Like, you either follow your rules or you don't. That's it, okay? So if your standards, which is your rules, if your rules change based on your mood, if you're going back to reacting, then you're never going to be profitable. Like, you're going to be stuck in this forever loop. You need predefined objective rules for your selection process that can stay the same regardless of how you feel. So I built one. This is the model that I trade now, and it's called the Monarch reversal model. It's a way of grading a trade setup before making any decision. Guys, before you enter, not while you're in it hoping. An A setup occurs when everything lines up perfectly. Every part of the model matches, and these usually make up for the cleanest trades because they have all the confluences that tick the boxes. Okay, they're quite rare, but they're worth waiting for because these are the ones that give you that smooth equity curve. When these appear, I never hesitate to take these as a setup. B setups, they're quite strong. They're not as conclusive as an A setup, obviously, but they're still very high in quality and they're worth taking 100% of the time because they occur way more frequently than the A's. As for a C setup, these are a little bit weaker. There's obviously still edge present there. That's why they're still graded as a C, but they rely a little bit more on the context, making it slightly lower probability. So you can take these, but you just have to keep in mind that they can sometimes be a little bit more unpredictable. And then the fourth grading, which is skip. I mean, these are obviously self-explanatory. If the setup grades as a skip, just don't take the trade. There's not enough confluences or there's not enough conditions being met yet, right? Not enough of those predefined objective rules being ticked for it to tell you you can enter the trade. These options exist to protect your precious trading equity. Okay, this doesn't mean that they're bad trades. It just means that there's no trade worth taking and you should just sit on your hands protecting your capital. Now here's the important part, because each grading is a set of predefined objective rules that must occur before it earns that grade. I'll repeat that one more time because I really want you guys to internalize this. Each grade is a set of predefined objective rules that must occur before it earns that grade. Anyways, this is just this tiny part of the entire model. There's a way larger framework behind this grading system and it goes into way more depth, but I won't bore you with that information today. But all you have to know is that all of my trades are ran through this model, so I never actually let external factors influence my trading decisions, and that's how I'm able to have my consistent trades and consistent results. That's how I made my trade selection an easy, repeatable framework that can't be misunderstood. I've also made this grading checklist completely free, so you can use it as well. It's just the first link in the description. Take a look at this setup. This one's an A graded setup. So you can see all of the confluences lining up here. Everything is in the correct positioning and the price action looks like it wants to go up. So we don't hesitate when we see these on the checklist. If it's an A grade, we take them straight away. We'll have a look at the outcome. Bang, it hit the win. That was a good trade. I want you to take a look at this second setup though. Immediately, what do you notice? Inherently, the price action looks the same, but if you actually take a closer look and you put it through the grading process, it actually grades as a skip. Now, you don't have all the confluences lining up here like you did as the A setup, but internally, your brain is immediately going to recognize that pattern of it looking similar, and it's going to tell you that, oh, this one has to win as well because it looks exactly like what that winner was doing. So I have to immediately take the trade. This is where acting on every perceived opportunity is going to kill your account. And then this is why the skip grading is there for a reason. It's to protect your trading equity. Have a look at the outcome. So as you can see, achieving a perfect trade execution can actually become quite easy. If a setup grades in A or B, you just take it. You don't have to think about it. If it grades a C, it depends on the market conditions. And if it's a skip, this one's the best one. You don't have to do fucking anything. You just wait for the next opportunity. The toughest part isn't making the trading decisions itself. They're actually quite easy. It's not hard to click a button along. It's trying to ignore all of the noise in between and doing nothing. Because the market continuously generates all of these weak signals, if you will, or these perceived opportunities. That's what actually activates your brain into wanting to take action because of all this FOMO and emotions and heightened states. Those are what's keeping you guys in this trapped, unprofitable cycle. And once you actually start to filter these out consistently, that's when your trading starts to become structurally simple. And that's the real shift, okay? Simplicity, right? Due to this simplicity, you'll end up with smoother equity curves. You'll have lower and shorter drawdown periods, which will result in positive P&L. Simple. It's the same system that you guys trade with, but with more clarity in which trades to be taking. It's just filtering out the dog shit. Trading feels hard because you're doing way too much. Not because you're missing some secret guru knowledge. Not because your system is broken and you need to fix it. Not because you need more information, but because you're trying to take action in everything that you perceive as an opportunity. Once you remove this instinct, your trading results will improve dramatically. If you guys want the grading checklist I use every single day and I showed in this video completely for free, it's the first link in the description. Otherwise, thank you so much for watching. I'll see you guys in the next video.